Are you considering buying a multifamily property? Of course, one of the advantages is the potential rental income. However, one of the barriers is usually the sizable down payment that you have to bring in for that larger property. I'm here to tell you today that Fannie Mae has a new program that allows you to go into a multifamily property of 1 to 4 units with just 5% down. I'm Hannah Escher. I'm a mortgage advisor and rookie investor, and I am so excited to talk with you about this product today. Fannie Mae recently just put in place a new policy around multifamily units and how you can go about purchasing these properties. You can now come in with just 5% down. This follows their other guidelines of how you can purchase a single family home with just 5% down. So they're really trying to make home purchasing more affordable across the board. So now not only can you purchase a single family home with 5% down, you can purchase a multifamily property that is 1 to 4 units with 5% down conventional. This used to only be possible through FHA financing, where you could put 3.5% down on a multifamily property. Being able to do this with conventional financing allows you to take advantage of the other perks of conventional financing, such as when you reach that 20% equity mark, your PMI falls off. So let's take a look at who qualifies for this new guideline. In order to qualify for the 5% down on a multifamily property, you will have to be using that property as your primary residence. So you can't purchase that property as an investment property. You do have to live in one of the units. The other perk of this is that you can use the rents from the other units towards your qualifying income. This is a huge advantage when you're qualifying for a loan like this that is most likely going to be larger than if you were purchasing a single family home. So you have to be a primary residence, it can't be a second home, and it can't be an investment property. You also want to make sure that your credit score is in the higher range if you're going conventional. When I'm talking about higher range, I'm talking about in the 750 plus arena. If you can even get 760 plus, even into the 800s, that's just going to make sure that you are getting the absolutely most affordable terms that are available to you. Now, let's talk about property type here, because that's where this can get tricky. When we're thinking 1 to 4 unit property, many times what comes to mind is going to be, oh, well, maybe I can purchase this property that has 2 homes on it, right? Let's stop there. Because most of the time, that type of property is not going to be a multifamily property. Could possibly be a single family property. The important thing to check when you're looking at multifamily properties versus single family properties is the zoning. The actual lot itself has to be zoned for multifamily versus single family. So when you're looking at a 1 to 4 unit property, make sure that you're speaking with your realtor and your mortgage advisor about if these properties that you're looking at can even qualify for this program. Now, if you are looking at a single family home and maybe it has an ADU on it, or maybe it has a second home, talk to your mortgage advisor about if that income can be used toward your qualifying income, because it just might be able to. Conventional loans are now being able to add in some ADU rental income towards qualifying income in specific cases. So if you find a property that might be zoned single family, don't discount it. Talk to your mortgage advisor about it and your realtor and see what's possible. Now, back to multifamily. So when you're looking at those multifamily properties, it has to be zoned multifamily. And if you want to use this type of loan product that allows you 5% down, you have to be a primary residence, and it can only go up to 4 units. This is also very important. For the property to qualify within this program, it cannot be more than 4 units. And that's specific to most residential properties. Once you get above that 4 unit mark, you're really getting into commercial financing. Another thing you might run into when you're shopping for multifamily properties is you might find that these properties are already occupied with renters. And you might be thinking, wow, that's absolutely great. I don't even have to find a renter, right? However, Many times when that's the case, renters are going to be paying under market rents. And when that's happening, that can reduce your qualifying income. So if a renter is already in a unit and they're paying under market rents, most of the time you have to count the rent they're actually paying currently to the qualifying income instead of current market rents. So keep that in mind when you're shopping for these multi-unit properties. If you know your income numbers are going to be tight just with your own income and you need that additional rental income from those units to qualify, keep in mind if properties with renters already in them are going to be able to get you to that threshold that you need to be at. Again, talk to your mortgage advisor about this. They will be able to help you understand where you need that qualifying income to be in order to use this program. From an investor's point of view, let's look at a single family property purchase versus a multifamily property purchase. If you're going to look at purchasing a single family property, you're going to think about, okay, this is going to be lower maintenance. At the end of the day, if I'm renting this out, I'm probably renting it out to one person or one family. So it's going to be less management. Also, usually a single family property is going to be a lower cost to get into just because most single family homes are at a lower price point than multifamily homes, especially since it's one unit. Now, let's look at this from an investment perspective, looking at a multifamily property. If you're going to be investing in a multifamily property and doing the 5% down option, one, it will have to be your primary residence. However, after a certain amount of time, you can rent out that property completely, besides just having the additional units rented out from the beginning. It does take more maintenance. It's going to be a larger building. There's going to be more things you're going to have to take care of in the short term and long term. And it's going to be more management because in a multifamily property, you usually rent that property to more than one family. It's going to be multiple people most of the time that you're going to be renting that property out to. With single family properties and multifamily properties both, if you're going conventional financing, you can do a purchase either way with 5% down. So just keep that in mind. If you do have limited funds, you still can look at multifamily properties. You don't have to be limited to just single family properties. Just as a reminder, if you are interested in looking into a conventional loan, whether that's single family or multifamily, remember you want to have a high credit score to help lower your costs on private mortgage insurance and your interest rate. We want to make sure your debt to income ratio is within the guidelines that are put out by Fannie Mae. So that's going to usually be under 50%. But if you can get under 45% as your debt to income ratio, your pricing, your rate, and your PMI will usually be even better. So debt to income ratio is really important. And then remember, if you're going in with less than 20% down, there will be private mortgage insurance. But private mortgage insurance does not have to be expensive, especially if you have a high credit score and a good debt to income ratio. So keep that in mind. If you're going with conventional financing, if those other parameters are in place, then your private mortgage insurance should be very affordable. That's it for today. I'm Hannah Escher. You can search my name on BiggerPockets. If you found this video helpful, like and subscribe to the BiggerPockets Rookie channel for more videos just like this. And I'll see you next time.